Hi, this is Kerry Artek with Wicked Stocks, bringing you an individual stock pick in Apple Incorporated, symbol AAPL. I did record this video on Monday, May 2nd, 2022. Take a brief look at the fundamentals, courtesy of Yahoo Finance. You can freeze frame here if you want to take a look. Otherwise, I'm going to jump to the charts. This is a long-term chart going back some 20 years. We're going to zoom in here and open the chart up. And just so you know, this is about the third Apple video I've done in roughly 2 months. The first two were for premium paid subscribers to wickedstocks.com, in which I apprised them of a channel bottom that you'll see actually right here. We tested that in mid-March, and we recorded a video that week apprising them of that support, that it could contain quarterly selling pressures, possibly into later year, and from there we could rally up to a channel resistance I'll also show in a moment. But because we've done two of these in the last couple of months, we figured this is kind of old information for them. We'll make this one free for YouTube. But keep in mind that we put out two individual stock picks like this a week that you never see on YouTube that are for paid subscribers. And it's $25 a month for 8 stock picks a month. And in addition to that, you get the weekly DIA, Dow Jones Industrial Average, the weekly IWM, the Russell 2000, and the weekly Bitcoin report, and the 8 stock picks a month for $25. I think that's a great deal, if I may say so myself. Let's move on to the charts themselves. These are the points that we use. These are the most extreme points that you can use. Provides the softest angle on this channel structure. In other words, as far as I'm concerned, it's the most valid. And it's the last backstop before this market continues south into the rest of the second quarter and into Q3, but we're not there yet. And so this is still bottom picking territory. At 154.76 this week, that channel bottom rises 66 cents a week, the week of May 2nd, and holding above it, we can push on into the mid 190s or higher over the next 3 to 5 months, which I'll also show you in just a moment. But first, because we're so close to this line, I want to talk about the consequences of closing below it. And if we do, it would need to be by a 1% margin. And it could be even on a daily basis. Despite the fact this is a weekly chart, any daily settlement below 154.76 by the 1% margin, in other words, 153.21 or lower any day this week, and we have ourselves a sell signal. Now, it would be a bit quote-unquote tentative. It's valid, it's actionable, but you may await the rest of the week. So, if you're a scale trader, which I like to do, you could play the short side on half of a position, perhaps 125 out of the money puts, because this would be the target actually, 125.64. I would give that about 2 to 3 months. So if you bought 125 puts based on that sell signal, I would suggest that they not expire for at least 3 months. And in fact, I would probably go up more like 5 or 6 months so that you're not subject to all that time decay on the way down, and you've got decent delta so that that put will continue expanding as Apple continues south to 125.64, which once again would be indicated if we settle below the 154.76 channel bottom by a 1% margin any day this week, and certainly on Friday, May 6th. That would sort of seal the deal, if you will, to the downside. Now, I'd be remiss if I didn't mention the fact that there's a descending channel bottom that is presently at 148.16. And so there's a couple of ways to play this. If you play the long side, you're bottom picking 154.76, and you could consider stopping out below 148.16. Now, I don't like to risk more than 1% of my trading capital on any endeavor, on any position, and I would suggest that you consider the same. So you would trade an appropriate amount of shares, buying 154.76, so that if you were to stop out, let's say at 147 or lower, that it doesn't rob you of more than 1% of your trading capital. You could also buy 154.76 and stop out below 154.76 in the 152, 151 handle, let's say, below that 1% threshold. And then if we close below 148.16, you have a clear green light. I should call it a red light for bearish continuation into that 125 handle, 125.64. So there's that. I'm trying to think if there's any other ways to play it. Yeah, there's one other way to play this, and that's entirely from the short side. So if we close below 154.76 by that 1% margin, you could buy the 125 puts, maybe buy half And then if we, or when we, let's say, close below the 148.16 formation, you could buy the other half, because that is secondary confirmation and should result in price acceleration, or price deceleration, I should say, to the downside. The market, once closes below 148.16, that descent becomes more accelerated, and that could be in a matter of 3 to 5 weeks of closing below 148.16. I don't want to blur the distinction here, though. I do think that the mere settlement below 154.76 by that 1% margin should yield 125.64 over the next 2 to 3 months, where we could actually place an annual low that is a meaningful long-term channel bottom that goes back some 2 years. Let's talk the upside. That holding above 154.76 will keep this channel structure at 172.17 in reach. But the point I really want to make is holding above 154.76 as we continue into later year. In other words, over the next 3 to 5 months, I do think that 195.31 channel top is in play, and it can contain quarterly, if not annual, buying pressures when tested. So that is the big picture. If you're bottom picking 154.76, you could hold off or hold out for 195.31, also rising at 66 cents a week. Or you could play the 2 to 3, 3 to 5 week pop to the upside that is likely to occur as we move into June trade, a late May, early June trade. Off this 154.76, the 172.17 channel top is in reach. That 172.17 channel top, by the way, is a target that I'd mentioned the week of March 14th when we were testing the longer-term channel bottom that's presently at 154.76. And as you can see, despite the fact that there's some pretty sloppy trade up there, pushed through it in a meaningful way, we never closed below it. And so it essentially held. And here we are, the market has fallen back, and we are retesting long-term support at 154.76. So holding above 154.76 over the next 3 to 5 weeks, 172.17, and over the next 3 to 5 months, 195.31, both levels changing gradually. And just know that if we were to close above 172.17 or that channel top between now and, say, the end of June, I do see price acceleration to the upside following that event within 2 to 3 months at the very most. That 195.31 channel top then likely to be reached, where once again we can top out on a quarterly, possibly annual basis. These are the brackets here for the next 3 to 5 weeks. 154.76, much more meaningful. And once again, I think that I'll just leave you with this image. Closing below 154.76, expecting 125.64 within several months, with hesitation expected on the way down at 148.16, and if settled below, should result in a more aggressive, accelerated descent to the 125.64 formation that could be in as little as 3 to 5 weeks, perhaps. Anyway, I think that pretty much rounds it out for this particular Wicked Stocks video analysis on Apple Incorporated. Consider becoming a wickedstocks.com premium member. You'll get 8 of these a month that are never shown on YouTube. And you also get 3 weeklies, DIA, IWM, and Bitcoin. You have a great day.